Now I want to show you how to do most of the rest of the spreadsheet. So dealing with pre-tax withdrawal calculations, my tax bracket calculations, and then my income calculations over here, starting in column L. And then finally in column AS, I calculate my total tax that I will owe for the year. Here's where some circular references become involved, which I'll explain in a bit. First, though, I want to calculate my pre-tax withdrawals from retirement. So in column J, I've calculated how much I think I'm going to need to spend um, to live the way I'd like to live based on my standard of living and how much I've been making before. And then I've calculated ultimately in column M what I think I'll receive from Social Security. So basically in column N, I just basically want to subtract how much I think I'll need to live minus how much I think I'll get from Social Security, because that's going to tell me how much I'll need to withdraw from my retirement account. But the formula, alas, is not as simple as just saying take column J and subtract column M, but it's not a bad formula. First, I just said if my year column A is blank, then put blank. Otherwise, take the maximum of the difference between column J, my after tax income needs, and column M, my Social Security expected entitlement that I'll actually get after all the things that we consider with Social Security. So take what I need minus what I think I'll get from Social Security, subtract those, and take the max of that result or zero. That's just in case, like, I mean, in the very unlikely possibility that my income needs are, let's say, 20,000 and my Social Security is 30,000. 20,000 minus 30,000 gives me a negative number, um, which means I won't need to withdraw any money from my account. I wouldn't put a negative number in column N. That's why I told it to take the max of that difference or zero. Um, Otherwise, turn a result of zero. And then it was giving me an error. And so I just, for certain years, it was working right on the years it needed to work right on, but on the years it wasn't needing to put a number, it was giving me a value error. So I just used the if error function and said if we get an error, then just put blank. The error wasn't an error due to a mistake in the formula. And so basically, once I retire, then it's going to calculate. I've got my income needs, I've got my Social Security expected funding or receipts, and it subtracts those two and gives me the answer. And this is how much I'll need to withdraw from my 401k before considering taxes. But whatever I take out of my 401k, that's when I'm going to start paying taxes. So it's now time to start considering taxes. And and so I think first I'll just talk about taxes. So let's just go over here to the tax set section. So I have a lot of columns that relate to taxes, but the calculations aren't too bad. But first, let's just look at this tab called Current Tax Tables. Here, I just inputted the numbers from that tax table that I included on your instructions. So it's got the rate at which you'll be taxed, the year that the tax tables relate to, and I'm assuming this would be updated as time passes. This is the starting amount for the 10% bracket. Well, the starting amount that's taxed at 10% is zero. And then the next bracket is 15%. The amount by which you'll be taxed, or at which you'll be taxed 15%, starts at 9,325. It lasts till 37,950, at which point you'll start getting taxed at a 25% rate. So essentially, any money over 40% will Any money over 418,400 will be taxed at 40%. Any money over 416,700 and between 418,400 will be taxed at 45%. So any money between these two brackets will be taxed at 10%. Between these two brackets, taxed at 15%, and so on. But the IRS kind of approximately indexes these bracket amounts by inflation. It doesn't work exactly that way, but for the purposes of this project, we'll assume that it does. So these are only 2017 values. I essentially have to calculate these bracket values for every year. Um, I really only need to calculate them for every year that I need them, but I just thought I would put them for every year. It doesn't hurt to have them here. So, but I also said once the person dies, then to put blanks. And even though the 10% column, the starting amount is 0, I put it in here anyway. So the values in columns AE through AK are the current tax table bracket dollar amounts indexed for inflation every year. So if they're dead, put blank. Um, Otherwise, for the very first row, I just linked the value from the current tax table tab. For the second row, if they're dead, put blank. Otherwise, take the previous amount and increase it for inflation by 1 year. So calculate the future value by taking the present value times 1 plus I to the power of 1. And you don't actually really need to write that exponent of 1. I did the same thing for all of these columns, for AE through AK. Next, I need to calculate, well, again, I could have done all of this part in a single cell, but it was making my formula huge, and I decided to just break it down to make it easier. Um, so what I'm calculating in columns AL through AR are the amounts of a person's actual withdrawals from their 401k that will be taxed at different rates. So I'm actually just going to scroll down to a year where it has dollar amounts. So that will happen in row 50, the point at which they actually start taking money out of their 401k. So they're going to take 140,000 out of their 401k. That's this cell right here, O50. Well, I need to split that into the different brackets. And I guess I will freeze my panes so you can see that a little easier. Well, that's not where I wanted to freeze them. I don't know why it did it that way. Gotta put my cursor here. Well, what the heck is going on? I don't know why it's not doing what I want. There we go. So, I forgot what they were making. I'm going to just look at it again. 140-ish thousand. Yeah. So, I'm going to have a couple of these on screen at one time. So, the amount that's going to be taxed of that 140-ish thousand, the amount that will be taxed at 10% would be the amount from 0 to 27,026. And since they made more than 27,026, exactly 27,026 of that 140,000 will be taxed at 10%. Then it goes to the next column. How much of their 140,000 will be taxed at 15%? Well, that amount is the difference between $109,990 and 27,9 or 026. So that difference is 82,923. How much of their 140,000 will be taxed at the next rate of 25%? Well, they don't 140,000 isn't enough to push them over to the next bracket, so it's just going to be 140,000 minus 109,990. So this is basically taking their 140,000 that they're going to withdraw from their 401k this year, allocating it across the three different tax brackets. And I don't know if y'all can see, I don't think you can, but if I were to sum these three numbers, it equals that 140,000. So let's look at the formula. So basically said if they're dead or if they're working, then I don't need to calculate the taxes because that means they're not withdrawing out of their 401k, so just put nothing. Otherwise, then they need to take money out of their 401k, so let's calculate how to allocate that money across the different tax brackets. And remember, the amount being calculated isn't the total tax or it's only the amount of their 401k withdrawal that's being taxed at this bracket, which is 10%. So the amount that will be taxed at this bracket will either be zero or zero because they didn't make enough money to be included in this bracket. That's not applicable for the 10% bracket, but it will be applicable for other brackets. Or the minimum of two numbers. The first being 050. 050 is this with 401k withdrawal. So let's say you only made you only withdrew $10,000. So that would be $10,000 right here is your 050. Or a F50. A F50 is the next column's bracket amount, $27,026. So if you made more than $10,000, let's say you made $50,000, then it would choose the minimum of those amounts, 50,000 or 27,026. And then what it's going to do is subtract the previous bracket's dollar amount from that result. I'm going to actually just type in some numbers here, and I'm just going to use this cell to do that. It's probably a bad idea. Actually, you know what? I'm going to just do the evaluate formula and just really hope y'all can see that. Maybe you can zoom in on the video. So for the first couple of them, it's just saying they're either retired or dead. So I'm just going to get past that. And so now we're to the point where it's actually going to do that formula. Well, this is the year the person made 140,000. So what it's going to do is look at how much they made. There's, oh shoot, it didn't do it all at once, so I'm going to close it and do it again. Sorry. Alright, so it's going to look at O50, which is 140,000, and then it's going to look at AF50, which is 27,026, the amount at which the 15% bracket starts. And it's going to take the smallest of those two numbers. So the smallest of those two numbers isn't the salary in O50 or 401k withdrawal, is what I meant to say, in O50. Instead, it's this 27,026. And then it's going to subtract AE50, which is the amount of the previous bracket, which happens to be 0 from that. So essentially all this is doing is calculating the 27,026, the amount that's going to be taxed at the 10% rate. And this would be very easy to do for a single person for 1 year's 401k withdrawal, but in trying to make the formula robust so that it's flexible and adjusts for any different type of client, it just increases the complexity. But there it is. And I'm actually going to do this next one, or yeah, I'm going to do this last one for this particular year because that's where it gets, I guess, a little more interesting. So I'm going to evaluate my formula again. Again, it's just checking to see if they're alive or working or retired. And now it's going to find the minimum of their 401k withdrawal, which is 140,000, or the preceding column's bracket amount, which is 266,352. But but this time, the minimum of those two is the salary of 140,000. So it's going to choose that. So basically, it's saying, hey, I keep calling it salary, but it's 401k withdrawal. So it's saying, hey, this year they're not withdrawing so much that it's going to kick them into the next highest bracket of 33%. Their top bracket is going to be 28%, and not all of their withdrawal will be taxed at 28%, only the amount that's above 109,990. That's what this is calculating. So, it's going to find here the minimum of their 401k withdrawal of 140,000. Then it's going to subtract the amount of the previous balance of 109,990. So how much are they over in their withdrawal of the previous tax bracket? So of their 140,000, only 30,398 will be taxed at the 28% bracket. So it's going to put a max of 0 or that amount that we just calculated. So that's how I got the 398. Now here, I'm actually going to do this one so you can see what's happening. Again, I'm just going to skip the part and make it go until it gets to the max part. So here it's going to take the minimum of their 401k withdrawal or the preceding column's bracket amount, which would be 33% at row 50, 55,455. But it's going to take the minimum, which is going to be the 401k withdrawal. Then it's going to subtract the previous bracket amount of 266,352. That's actually going to give it a negative number. That's why, and basically that means this particular person didn't have any money that's going to be taxed at the 28%. That's why I told it to choose the max of 0 or a negative number. So it's going to choose 0 here and say this person doesn't have any money that's going to be taxed at this current bracket. So I do that formula for all of the columns AL through AR. And then finally it's time to find my total tax for the year. And I'm just gonna, I have this formula starting at the very top of my spreadsheet in column 14 or row 14, but I'm going to show it to you here because I actually have numbers. Taxes start once they retired and take money out of their 401k. So my formula here uses the sum product. Again, I've got the standard if they are not withdrawing money out of their 401k, then put blanks. But otherwise, you need to calculate their taxes. So take all of their money that has been distributed across the different brackets, that's columns AL through AR, and then multiply those values by the appropriate rate for each bracket. So I'm multiplying by AE through AK. And that is, notice, an absolute reference in my formula. But the AL 50 through AR 50 are relative references. And they both have to go in the sum product. So what the sum product function is doing is taking the values in this range and multiplying them by the values in this range. But notice it's dividing them by 100 because instead of 40% here, I actually have 40 typed into my cell. And I just used custom formatting to put that percent sign. So I have to divide those by 100 to calculate the percentages. So it's taking my income allocated across the tax brackets, multiplying it by the tax rates appropriate for those brackets, and then summing the result. Essentially what it's doing right here is a weighted average. And that's the tax that I will owe for that particular year. Now I'm going to take that number, so that's A in column AS, and I'm going to come back over here to my taxable withdrawals. My taxable withdrawals are going to be equal to, I gotta go over a little bit more, my after-tax needs during retirement minus, oh, I screwed up. It should be minus column N50. So I need to fix that. Sorry, M50. Or I could do it this way. I could take, oh, actually, I should probably do it this way. I should just take N50 and subtract AS50. So instead of J50 to K50, this should say N50. I'm not going to change it right now, but I'll fix that. It should give me the exact same answer, although no, actually it won't, because I screwed up and used my Social Security without restrictions, and I should be using my Social Security after restrictions and funding issues and taxes. So anyway, so if they're working, put nothing, because I'm not worried about taxes right now. Otherwise, this means they're not working, so they're retired. Then put their pre-tax withdrawals from retirement, column N, minus their taxes, which is column AS. Oh, so sorry, it's plus their taxes. Because if I need 140,000, I'll go ahead and fix it. What is that, N50? So if they need 140,000 to live on after considering their living needs and their Social Security receipts, and they're going to owe in taxes about 30,000 from AS50, then they actually need to withdraw about 170,000, because of that 170,000 they're taking out, they're going to have to pay 30,000 in taxes. So that's going to leave them about 140,000 to live on. That's why I added taxes to that. Now, this creates a circular reference issue, but it's one that is necessary and it's not a mistake. So this is why I have my circular references allowed. And just to reinforce how to do that, to turn on your circular references, you click on File, Options, Formulas, and check this Enable Iterative Calculations. And I just need to copy that formula up and down because I had made changes to it. Okay, my last column for this video will be my base case calculations. So here I'm just tallying how much I've got in my 401k plan. It will be increased by deposits that I put in and deposits my employer matches. It'll be increased by the return that I'm earning. It'll be decreased by the withdrawals that I'm making. So I need to have a return calculation that is up here in column B8, I believe, or cell B8. Oh, I've got my frames locked. Here we go. So B8 has my expected return for my working years. B9 has my expected return for my retirement years. And remember, that's driven by the values here, which are driven by the buttons on my dashboard, or the sliders, and or the sliders on my dashboard. So, best case, sorry, base case working year return, base case retirement year return. So, let's pop back over to my base case numbers, and I'm going to scoot this over a little bit. Okay, so if I'm the client is dead, put nothing. If they are less than or equal to their retirement age, so that means they're working, then I need to use their working expected return. And what I want to do is, for this very first year, is sum their current savings. Their current savings is just a number straight from my inputs tab. So here I have I don't oh so their total current investments, that's what I've called current savings. So if they're working, sum their current savings, um, increasing it by their rate of return. Again, I'm just converting that to uh, the proper format because I entered my rates of returns as whole numbers, not percentages. Uh, and then also add to it F14, which is your employee contribution, and H14, which is your employee contribution. And I think I actually have a mistake here too. I think I forgot to add in G14, which is the contribution if they're age 50 or older. So I wonder if it is not including these. I'm going to have to double check that. And I could just put another comma in G14, another comma in I14, and that should fix it. I'm actually going to go check. All right, I did check on it, and I did forget to make this adjustment. And that's what had happened was when I originally designed the spreadsheet, that's all it needed. But after I did these revisions to break some things into more columns to make the employee contributions more or easier to handle, I forgot to include those extra columns in the calculation of my running total or running balance in my account. So here, in addition to F14 and H14, I need to add G14 and I14, which are these two extra columns that I had added when I made some adjustments. So if they're working, sum those four columns and increase the current savings by the working expected return. Otherwise, then they're not working. So just take so they're not adding any money to their account. Just take their current savings and increase it by the retired expected rate of return minus any taxable withdrawals from their 401k plan, because this means they've retired and they're withdrawing money. So I'm just going to hit return, and I'm going to copy that down. Oh shoot, I shouldn't have copied. Don't copy that down because the second year is different. Only the very first year do I reference current savings. After that, I'm taking the previous year's balance and just incrementing it by the rate of return. So if they're dead, put nothing. If they're not work, if they're working, and not retired, then take the previous year's balance, P14, right here, uh, increase it by 1 year's return, the working year's expected return, and then add any contributions. And again, I have to include here G15 and I15 to deal with that same issue. And then otherwise, here they are retired, so take the previous year's balance, increase it by the retired expected return for a year, and then subtract their taxable withdrawals, which are in column O15. And then this formula can be adjusted. It didn't make any changes when I added the G and I columns, because at least it didn't make any changes here. It's not until they exceed age 50 would you see those changes, and they're not 50 yet in my example. So that's how I did the base case. The worst case, the only change I made was I referenced the worst case returns, and then the best case, I just referenced the best case returns, and those are here.